RIN TV coverage of the 2015 NARA Conference is brought to you by the National Risk Retention Association. Vermont bills itself as the gold standard of captive domiciles, and with more than 1,000 captives, including 48 of the Fortune 100, Vermont certainly has some right to its claim. We spoke with Sandy Bigglestone about the business-friendly environment that Vermont cultivates to attract captives and RRGs. She is Director of Captive Insurance for the State of Vermont and had this to say.
Vermont is a popular state for captives because we have a regulatory approach that is friendly for business. We believe that our regulatory approach has been perfected over the years. We've had a number of years to perfect it, and we're constantly looking to refine that approach and improve that approach. Also, we have a great partnership with our Agency of Commerce and Community Development and with the VCIA, which is the Vermont Captive Insurance Association. And over the years, that's been really great for business. The other thing that I'll highlight also is that we have a dedicated staff in our department, which is quite a unique model. Our staff focuses only on captive insurers and risk retention groups, so we are the experts in what we do, and it allows us to control the cost of our examinations. Some of the things that an RRG has to go through to be domiciled in Vermont, we have a formal application process, but what we do is we ask for the courtesy of a pre-application meeting. That gives us a chance to understand why the risk retention group wants to form, what problem it's trying to solve, etc. In the application process itself, though, there's a lot of information that we ask for. Feasibility is a really key part of that. Financial projections, both on an adverse and an expected case scenario, loss information, business plan information, what lines of coverage they want to write, limits, retentions, reinsurance program, governance documents. So there's a host of information that comes in as part of the application. Another part of the process that we find very valuable to us as regulators, we farm out the application documents to an actuary of our choosing, which for a low cost, we believe that provides a really great second opinion. It's an independent opinion of the program for the risk retention group formation. So that's important. All in all, the process takes from application filing to licensing 30 days or less. I have some advice for a risk retention group that wants to start a captive in Vermont. And it's simply, as I mentioned before, that pre-application meeting, that's really important to us because it gives us a chance to understand what the company wants to do, how it expects to be capitalized, and how it expects to run its operations going forward. It's an opportunity for the company to see that they might be a good fit or not for Vermont, an opportunity to iron out any issues that they might have with our laws, regulations, and complying with those. But it's also an opportunity for the company to get to know us and our approach to regulation. Regulators in Vermont are very objective when they're reviewing larger companies versus smaller companies in terms of premium volume. That's one way to look at it. And the reason why we can be objective is common sense and flexibility has been really key to that balance. We do look at companies holistically, so we want to know if their policyholders' owners are financially stable. We also look at certain factors about what their exposure in the captive or the risk retention group might be. Are there lines of coverage, short tail, long tail? Is there volatility? Does geography come into play? So we aim at looking at companies on an individual basis and apply flexibility and objectivity at every step of the way.
For more coverage of the 2015 NARA Conference, visit the RIN TV On Demand Library.